The dominant feature of the coming week is likely to be the budget, introduced by Chancellor of the Exchequer Philip Hammond on Thursday the 22nd of November. The still fragile state of the nation's finances and its substantial borrowings may yet limit the government's room for manoeuvre here. This chart shows the government's annual overspend over the past decade and the Office for Budget Responsibility's forecasts for the next 4 years. That lot means that the aggregate deficit is around £1.7 trillion or 88% of GDP. Any incremental spending in one area may therefore have to be matched by cuts elsewhere. Now, to raise money, Mr Hammond could look at any one or all of the following topics: higher rate tax relief on pensions, the £1 million pension lifetime allowance, the £40,000 annual pension contribution allowance, pension death benefits, the planned increase in the personal tax-free income allowance from £11,500 to £12,500 by 2021, or indeed national insurance contributions for the self-employed. Now, possibly areas where he may look to use any money that he's raised, well, they could include an increase in the £4,000 annual lifetime ISA allowance or the junior ISA annual allowance, which is currently £4,128 and linked to inflation. Or he could look to some form of holiday or break on stamp duty. Now, but for all of that, it's probably best not to try and second guess this too much, especially as there's going to be a deluge of fundamental company information coming our way at the same time. FTSE 100 firms scheduled to publish figures or a trading statement in the week ahead include Babcock, Compass and Kingfisher on Tuesday the 21st of November, Sage and United Utilities on the 22nd, and Severn Trent and British gas owner Centrica on Thursday the 23rd. But for me, the biggest potential source for fuss in the week ahead is a set of full-year figures due from airline easyJet on Tuesday the 21st. As easyJet's share price chart suggests, it's been a bit of a turbulent year for the airline industry. We've seen the bankruptcies of Monarch, Air Berlin and Alitalia, May's monster IT glitch at British Airways, Ryanair's scheduling shambles, and a big jump in the oil price back above the $60 a barrel mark. Now, easyJet also has a new chief executive ready to touch down on the 1st of December when former TUI man Johan Lundgren will replace Dame Caroline McCall, who's joining ITV in January after 7.5 years in easyJet's cockpit. October's trading statement from the company was at least pretty cheery, and Dame Caroline steered pre-tax profit estimates to around £410 to £415 million for the full year, with lower fuel costs helping by around £230 million and foreign exchange movements costing around £100 million. This chart here shows the historic and forecast progression in pre-tax income. Besides that headline number, check out the dividend per share, which is expected to drop to around 41.5p a share, owing to the decline in headline profits, as we can see in this graphic. But the real interest is likely to lie with the outlook statement for the financial year that's just begun. As you've already seen, the consensus analyst forecast is for a mid-teens percentage increase in pre-tax profit to around £470 million. The key moving parts here are as follows: capacity growth, where easyJet has previously targeted 6% increase; currencies, where Dame Caroline has flagged a £20 million negative effect; and fuel, where forward hedging, or buying, means costs are expected to drop again by another £125 to £145 million, despite the jump in the oil price in the second half of this year. This final chart shows the trend in fuel costs, so clearly one question here is what happens when the hedging expires if oil is still around $60 a barrel. Let's see if the company's got anything to say on that front. Thank you for watching, and I look forward to seeing you next time.